Hey there, amazing viewers. Welcome back to Worker to Trader, your go-to channel for breaking down complex financial strategies into actionable steps. Today, we're diving into an absolute gem, Ray Dalio's All-Weather Portfolio. But before we embark on this enlightening journey, I want to stress the importance of consulting your financial advisor before making any investment decisions. This video is all about education, not financial advice. Alright, let's dive in. Now, let me introduce you to the genius behind the strategy, Ray Dalio. He's not just your average investor. He's the founder of Bridgewater Associates, one of the world's largest and most successful hedge funds. Ray's been in the financial trenches, honing his skills and insights for decades. And what's truly remarkable is his creation of the All-Weather Portfolio, a strategy designed to thrive in any market conditions.
In every place, in every location, in every investment, in almost every decision practically, there's a probability of being wrong and painfully wrong. And so, like I say, if I have 15 good uncorrelated bets, I will reduce my risk by 80% without reducing my return. And that means I improve my return to risk ratio by a factor of 5. So yes, it's like a casino, when the casino's playing and they have so many tables and so on, many things going on. It's not any one of them on any one night. It's all that diversification and that, consistency.
So, you might be wondering, how well does this all-weather portfolio actually perform? Well, let me share a glimpse of its track record. In the midst of economic turbulence, the all-weather portfolio has historically delivered consistent returns and weathered financial storms with grace. It's not about timing the market, but about maintaining a balanced mix of assets that stands strong no matter what mother market throws our way. At the heart of the all-weather portfolio lie two core principles: diversification and risk management. Diversification is like having a safety net. It's the concept of not putting all your eggs in one basket. By spreading your investments across different asset classes, you're reducing the impact of a single market's ups and downs on your overall portfolio. Risk management, on the other hand, is all about finding that sweet spot between risk and reward. It's about building a balanced mix of assets that can withstand the tests of time. Asset allocation is where the rubber meets the road in the all-weather portfolio. Imagine this. You have a mix of assets that work together like a symphony orchestra. Each instrument plays its part, contributing to the harmony of your portfolio. In the case of the all-weather portfolio, you're blending different types of assets, stocks, bonds, and commodities, to create a resilient, well-rounded investment strategy that's designed to perform across various market conditions.
As a generalization, if I was to make a big sweeping generalization, I would say one wants to invest in countries that have good finances, good income statement, balance sheet, earning more than they spend, and have good because they can withstand disruptions better financially, and they'll be more productive, that don't have big internal conflicts and are not in.
Now, let's zoom in on the individual components that make up this financial masterpiece. Treasury bonds take center stage. They're like your reliable anchor in times of uncertainty. When stock markets are turbulent, these bonds tend to perform well, providing stability to your portfolio. Gold steps in as the insurance policy. When traditional investments waver, gold often shines, acting as a hedge against economic turmoil. And then there are commodities. Think of them as the gears that keep your portfolio running smoothly. They have a unique ability to counteract the effects of inflation and market volatility. The balancing act of rebalancing. This is where you maintain the equilibrium of your portfolio. Imagine you have a garden with different types of plants. Some grow faster, while others lag behind. Rebalancing is like trimming the fast-growing plants to keep everything in harmony. It's not about predicting the future, but rather staying aligned with your long-term goals. By periodically adjusting your asset allocation, you're ensuring that your portfolio doesn't become lopsided, keeping your risk level in check. So, why should the all-weather portfolio be on your radar? Imagine having a shield that protects your investments from the wildest market swings. The diversity of assets in this portfolio helps mitigate risks and minimize the impact of any single asset class's poor performance. Plus, it's not just about protection. It aims for consistent returns and long-term wealth growth, no matter what economic winds blow your way.
So number one is think about how much you save and think about whether that should be how you borrow. Number two, make sure that you think about the diversification of that, not in cash. And number three, do the opposite of what your instincts are. If you're going to play the game, it has to be the opposite of what your instincts and the crowd says, because the market reflects the crowd. So you want to buy when no one wants to buy, and you want to sell when no one wants to sell, right? So, and that's emotionally difficult, and probably you're not going to play that game well, because it takes a lot of resources to play the game. We spend hundreds of millions of dollars each year to try to play that game well, and it's a tough game to play well. So I would caution you about the market timing game, but I would say that if you're going to do it in the ways that are uncomfortable. So.
All right. Let's put the theory into action and create your very own all-weather portfolio. Here's how you can do it. 1. Identify your goals. First things first, define your investment objectives. Are you looking for steady growth, capital preservation, or a mix of both? Consider your risk tolerance and time horizon. These factors will shape your portfolio. If you're a mid-career professional aiming for long-term growth with moderate risk, your objective might be a balanced portfolio that leans towards growth. 2. Asset allocation. Now, it's time to allocate your investments among different asset classes. The classic all-weather portfolio suggests a mix of stocks, bonds, and commodities. Allocate 30% to stocks, 40% to bonds, and 30% to commodities. Adjust these percentages based on your risk preference. 3. Component selection. Choose specific investments within each asset class. For stocks, you might opt for broad market index funds. Treasury bonds are a popular choice for the bond component, and gold ETFs can represent the commodities slice. Select an S&P 500 index fund for stocks, a government bond ETF for bonds, and a commodities ETF for your commodities exposure. 4. Portfolio weighting. Assign weights to each component based on your desired balance and risk tolerance. This step ensures your portfolio adheres to the all-weather principles. Allocate 40% to stocks, 45% to bonds, and 15% to commodities within your respective asset classes. 5. Regular rebalancing. Markets evolve over time, and so should your portfolio. Set a schedule to review and adjust your portfolio. Rebalance by selling overperforming assets and buying underperforming ones to maintain your desired allocation. If stocks have outperformed, you might sell some of your stock holdings and use the proceeds to buy more bonds and commodities to bring your allocation back in line. Remember, these examples are just a starting point. Your personal circumstances and financial goals will guide your decisions. Be sure to consult your financial advisor for tailored recommendations that align with your unique situation.
I got in the habit at a very early age that whenever I would make a decision, I would pause and reflect, particularly if it was a painful decision or a painful moment. I'd pause and reflect. I have a principle, pain plus reflection equals progress. And then I would write down my reflections. That's why the journal. I would literally use a journal. This journal, by the way, is connected to an app that facilitates that. And that's what I want to pass along. And
now,
I think,
remember, while the all-weather portfolio offers an incredible blueprint, it's crucial to tailor it to your individual circumstances. That's where your financial advisor comes in. They'll be your compass, ensuring the strategy aligns perfectly with your life goals and financial situation. Don't miss out. Stay with us on this exciting journey of financial empowerment. Hit that subscribe button, give us a thumbs up, and don't forget to ring the notification bell. Join the worker to trader community as we unlock the brilliance of Ray Dalio's all-weather portfolio, guiding you towards a future of financial resilience and success.